Before we start the show, please don't forget to subscribe to ClimateTech with Kentaro on your favorite podcast app if you haven't already. While you're there, you can also rate and leave us a review. Help us reach more listeners and build a community of climate tech enthusiasts and problem solvers. Thanks for your support, and now on to today's episode. I can't think of a person better suited for a conversation such as this, and in 15 minutes, even before recording, we've covered Japanese pop culture, the denim industry in Japan, and now hedonistic, high fashion, hopefully being replaced by more sustainable materials.
I know that your producers are disappointed that we weren't already rolling for that part, but
I'm sure we'll find 10 more rabbit holes to go down.
Right.
Such is the beauty of the podcast. This is Climate Tech with Kentaro, a podcast featuring the brightest minds and most influential voices in climate tech. I'm your host, Kentaro Kawamori. I'll go ahead and say that when we invite a non-founder guest on the show, there's a different dynamic. It was nothing short of a thrill to get inside the brain of somebody like Nathaniel Bullard. Nat has inhabited the analyst/writer role for a majority of his vast career. He is currently the chief content officer of BloombergNEF, and I'll let Nat explain what the whole NEF thing means. But in a nutshell, BloombergNEF is Bloomberg's primary research service on energy, transportation, commodities, and technology. In this episode, we're going to talk about what we're seeing in climate from a market-oriented lens. I'm telling you, this episode is so rich that we go from discussing decarbonization and where that's going to tinkering with Web3 and crypto and how that all connects. Broadly, Nat and I also chat about what qualifies as a climate company and what makes a climate tech company at that. The answer, Nat posits, is not as obvious as you think. Nat Bullard, welcome to the podcast.
Kentaro, thank you. Long-time listener, first-time caller, as they used to say in old radio. It's great to be here.
Well, I'm embarrassed to say you have to see me on video as we do this. I'm glad we don't record it. As they say, I've got a voice for radio and a face for radio as well. So thanks for joining.
And longer hair than the last time I spoke to you.
And longer
hair than your headshot. But listen, that happens. You're not at the point yet, like me, where you're starting to go gray. You need to eventually do a phase shift and upload a picture of you that actually looks like you. You've got a few years on you yet.
Well, we're super pleased to have you. Tell us a little bit about what you do at BloombergNEF and what the hell the NEF stands for. Of course, everybody knows Bloomberg, but certainly would be great to refresh the audience on exactly what that means and what your role as chief content officer entails.
Absolutely. So almost 15 years ago, I joined what was a little UK-based information startup covering clean energy and carbon markets that was called New Energy Finance. That was the NEF that we now know and love. That company had been founded 3 years prior in London by Michael Liebreich, who was quite a visionary in terms of being early in looking at markets in clean energy, I would say pre-almost sustainability argument, but thinking about specifically wind, solar, biofuels, and especially carbon markets, it being Europe in the early 2000s. And seeing that, in a landscape where there was a great deal of uncertainty and not a lot of information, creating a better sense of certainty using information proved to be very, very valuable business.
In late 2009, Bloomberg acquired NEF. Nat was previously based in Hong Kong and San Francisco. Now he's in Washington, D.C., heading content at BloombergNEF.
Bloomberg has been a fantastic home for this little business. It is, as most of you probably know, quite a machine for managing, integrating, distributing, maintaining data and analytics around financial markets. And I think especially for BloombergNEF, it's been a great home because it's a place for us to integrate with all of these other markets at orders of magnitude more scale than even the biggest part of energy markets in general. Thinking here about credit markets, about markets for global risk and things like that. So we continue to grow. We continue to cover new stuff. We now do basically everything, including this year, we will start covering agriculture. Basically, we worked our way through, You can think of it this way. We basically worked our way through the pie chart of global emissions, starting with the things that were addressable first, which is basically within the power market, and now sort of addressable next would be in transportation, and now getting into the things that are not just markets problems and challenges, but chemistry and physics problems and challenges, which is really, really where things are becoming really fascinating. And of course, there's an element within that of the, let's call it the connective tissue, the information and software layer where you live, of knitting all of these things, not just into markets in terms of buying and selling securities or products, but also behaviors, strategies, and the ways that companies operate.
Today, Nat writes a popular weekly column under the Bloomberg Green banner. There, Nat covers energy, transport, technology, climate, and finance.
It's a way to be in touch with my thinking on technologies and markets and strategies to a much bigger audience. And in particular, what I enjoy most about it is that it is a feedback loop. It's a way for me to get input from the founders and the funders of the world who are building all of what's coming next, and to hopefully put a markets-oriented lens on all of the things that we see happening in climate. I mean, I'm particularly interested in a world where policy and finance tend to dominate and technology is preeminent, thinking about what is actually the business. Like, what will the business of any one of these things actually eventually become?
I bet most of the listeners that do know you will know you from the newsletter, right? I think that's certainly what you guys have done with that franchise has been super impressive. And 2014 is certainly far ahead of the curve in terms of your peer set, let's call it, both in media and broader research. And it's been great to see the just the continuous quality of the newsletter is just astounding.
I'm really fortunate to be able to integrate this into this much larger body of work where we have people doing deep investigative reporting. You've got deep subject matter experts. You've got people who are able to see and compile the world of research that's coming from other research institutions. And then you've got some, sort of theoretical investigations. My colleague Akshat is fantastic at doing that, looking deep into things that we should be casting a very, very close eye onto. Are things actually what they say they are? Or do they follow the trend that we expect them to follow? And are they, a net good, and what phase along that path to getting from an experiment to something world changing are they at? Like, how far have they gotten along the way?
This period of coalescence and integration across the physical, scientific, theoretical, economical, financial, operational is happening at a more rapid pace than I think we've ever seen before. And, I think that's been part of the interest of reading the newsletter on such a frequent basis, because you guys are able to switch between those disciplines so quickly and weave them together, which I think most people have immense struggle with. But, even in our world, from the software perspective, like you talked about, software really is just the fabric to connect a whole bunch of stuff together, right? And I think that's a theme that's just going to become more and more prevalent.
We're kind of in potentially the culminating era of thinking about moving towards a deep decarbonization. The first one was very bespoke and very limited in many ways. So that was specifically generating zero carbon power, not zero electron power. That really wouldn't make any sense, but zero carbon power, ideally very low carbon fuels, and thinking about mostly compliance driven markets for carbon. And then, coming after that is this vague energy transition theme for companies, but it was a transition specifically about the energy. Either they're an energy company doing a transition, or it's specifically about transitioning the portfolio of energy assets or inputs that you have in a way. So, an elevated notion up from very specific, bespoke engagement and companies to a layer within companies. But now I think the world we live in, as the kind of dominant narrative becomes thinking about net zero emissions, is one that really leaves you no way of escaping eventuality. Basically, every part of your business, whether it's the part that has emissions or it's the part that consumes emitting power or inputs, It's the strategy suite, it's the financial officer, it's everyone in one way or another is going to have to be engaged on this. So there's sort of no air cover to avoid thinking about net zero if that's the thing that your business is going to do. Like, it's going to impact absolutely everything that you do. And that's breathing new life into old concepts in some ways. It's also reinvigorating things that we probably haven't talked about in a long time. And it's also making essential all kinds of stuff that was science experiment level a couple of years ago. Like, no matter what an amazing job the world does reducing process emissions, we're still going to have them. And we may end up, if we do it right, with $1 trillion annual market in, carbon dioxide removal that is entirely cost driven completely around either compliance from a government level or compliant company strategies going that route.
It's an interesting comment on the nature of that removal, and even things like very specifically that we just saw in the headlines this past week, the direct air capture world being almost entirely cost. It's very much a new financial instrument in some ways going forward, right? I mean, it's what you're selling really is derivatives of this conceptual product which you can't touch, feel, or see. Of course, it is physically being sequestered somewhere, but the end user and purchaser of this thing is never going to get their hands on it.
Imagine buying a barrel of oil that you never used.
That's right.
It's right. Or imagine paying for all of the processes that produced it, essentially in reverse, to then get something that is pure cost and that will never be accessed as a feature, not a bug of the way that it works. It's really very interesting to see how this is all going to shape up. And I'm cautiously optimistic because I see so much attention, so much ingenuity flowing into it. People really addressing the hard parts of the scientific aspect of it. But we're still so early on in determining what the market structure is going to be behind this. Are we going to have a global compact for carbon dioxide removal? I have no idea. Certainly the history of other markets would not necessarily point in that direction, but that doesn't mean that it's out of the question in the long run. Is it going to come in much more economical than people anticipate now? Certainly the history of other distributed technologies in the realms that you and I are familiar with tended to be cheaper, faster, better, and in higher volume than people, even the proponents of it, might have been expecting early on. But it still requires committing money, it requires making decisions, and it requires commitment. Like, it requires actually building things and getting them out there in the ground, active, and doing the hard part of any iteration at scale, which is that the first things are always more difficult than you expect. They take longer. They're oftentimes more expensive. They may have less efficiency, and moving past that, I think, is crucial.
In May this year, the U.S. Department of Energy committed over $2.3 billion to cut U.S. carbon pollution via funding of direct air capture facilities. You have this huge bifurcation between technology and infrastructure readiness and demand, where you have this unbelievable amount of demand that's going unfulfilled because you still have early stages of verification, the physical attributes of this, the actual sequestration. And so you're seeing this enormous rush of capital, of course, that's now going to enable this, which is very different than, say, other clean energy infrastructure components of the past, like solar, wind, or even EVs. If you didn't hear our episode with Dan On from Clear Vision Ventures in season 1, we talked about EVs or electric vehicles in depth and where that market is going. I urge you to listen back because Dan is a pioneer in the field. He shared tons of valuable insights on the future of EVs in that episode.
What's so fascinating, too, is that it is obviously not without its policy inputs, but it's being led by customers. But even then, what's so fascinating is that it's being led by customers who are not themselves the world's biggest emitters, but are essentially willing to put in or fund the hard yards of getting to that point so that other companies that are much bigger emitters are going to eventually be able to take advantage. I'm trying really hard to find an analogy in other markets for this, and I can't at the moment. Maybe you and I can come up with one in the discussion here, but I can't come up with an example of this. Solar or wind were markets that were led obviously by a huge amount of technology and innovation, but with either a compliance lens on them or a portfolio standard that meant that a certain amount of them had to happen regardless of the cost. We don't have that for carbon dioxide removal right now. And we are quite some ways away from that, if ever. Yet people are really building really intensely innovative and very, very thoughtful structures to essentially incept markets here. And I just find this really, really fascinating.
Yeah, I totally agree. I mean, it's so non-traditional of a demand curve, right? The supply and demand relationship being so inverse in this scenario than what you traditionally see in economics. The closest corollary that I've thought about in the past has been the LNG markets, which of course, back in the spotlight here recently, but it's also the perfect example of that inversion, right? You had companies like Cheniere and other LNG early pioneers for almost 2 decades now pushing what they saw as the LNG future. If you're not familiar, LNG means liquefied natural gas. These massive infrastructure builds with the LNG terminals to be able to ship these things, the tankers, which take years and years of lead time to build, read direct air capture facilities. And now all of a sudden the demand for LNG far outpaces the ability to ingest it because you don't have terminals to receive and those sorts of things. But as you just pointed out, it's a complete inversion of that demand profile, right? It was created because of a macro event, and the consumer base now is hungering for this product that existed on the market but with scarce supply versus the opposite. So certainly
right. And also when you deliver that liquefied natural gas, people do stuff with it.
That's right. That's right.
It's not shipping it. We're not shipping it from Sabine Pass to Northern Europe to simply pump it underground again and never access it for centuries or millennia. Now, and remember, even then, the LNG market began with the gloriously named Methane Princess, the first LNG cargo ship.
Wow, I did not know that.
Decades ago.
Okay.
No, it's been around for quite some time. It followed a market structure, and this is also interesting, that was primarily ultra long dated contracts decided at an almost governmental level. So if you think about kind of an archetypal early 2000s contract would be Qatar in the Persian Gulf exporting to JERA, Japan's consortium of gigantic buyers, on probably a multi-decade take-or-pay contract. And now it's cargoes changing ownership destination midstream once they've actually been lifted, compressed, shipped, and are going to get a destination on spot while out at sea. I mean, imagine that we get to a carbon dioxide removal market like that, which is that like somebody's willingness to pay changes based on their own emissions profile, and they're willing to go spot in order to buy in the market over time. We might get there, who knows? But these are the kind of things that actually I find useful, thinking multiple iterations ahead for what the future market might be like. And in fact, we're starting to see something very interesting coming out of a combination of Singapore and Germany to think about carbon market futures for other markets besides just the EU ETS. So, I'm very interested to see how markets trend towards mature structures. And in some cases, they don't. There will be times and places where things actually are completely different. But my curiosity is to sort of test those limits of which, on one end, everything is done with like a distributed autonomous organization that mints its own tokens for retiring unverified or thinly verified carbon credits versus banks transacting with each other and following their own established know your customer rules, and just sort of integrating this as another flow into what big institutions are going to do as they conduct their daily business.
I'm super fascinated by what will inevitably be the first big scandal in this because of what you just described, right? Where there's this amount of capital and this amount of demand that floods in. Inevitably, you're going to see, I think some massive financial innovation. And I agree. I think the decentralized nature of multiple blockchain innovations, I don't think it's just one, right? I think you're going to see NFT markets play a role. I think you're going to see even cryptocurrency derivatives coming off of this inevitably. I mean, we're already seeing some people are trying to do it, and some will take off, some will gain traction. And it's what I'm most interested to see is where Wall Street fits in.
Exactly. Where is Wall Street going to fit in?
That's right.
So Wall Street likes markets that have futures and forwards. They like derivatives and swaps.
Yep.
Are they, is Wall Street inherently going to want to be minting its own tokens for this purpose? No, not necessarily, at least. If it has an institutional buyer's appetite for it, maybe, right? Will there end up being a market making role? A few firms that are market makers in these? If there's a market to be made, then the answer is probably yes. My biggest challenge in this, because I'm not hugely technical on these matters, but I'm very open-minded to thinking about how to succeed, is to kind of get the direction of the problem solving correct, which is my sense from a lot of the discussions I've had are so very, very sort of tech forward within the world of Web3, is that people are using climate to solve Web3 problems rather than use Web3 to solve climate problems, if that makes sense.
By the way, I know that Web3 seems like this buzzy, obscure term that we seem to be reading and hearing about everywhere. Without getting too detailed, it's been touted as the future of the internet. It's the idea of a new kind of internet service, one that's built using decentralized blockchains as the underlying technology.
People are sort of moving from the first principle of the tools that they have available and the way that those tools work, and essentially finding markets to apply them to, versus the emissions-driven nature of things and saying, this is the emissions problem I need to solve. What is the best tool set in which to do that? And the real question, I think, will be, if you need to have something that is compatible with the New York Stock Exchange, Fidelity and BlackRock, and regulators in the United Kingdom, is it going to be a distributed autonomous organization and tokenization, or is it going to be something that resembles the way stuff already flows around between these sorts of institutions?
That's right. And in the meantime, the crypto industry as a whole has its own massive footprint problem they need to solve for anyhow. I think the fact that the proof of stake, world consumes such an asinine amount of energy, or rather the proof of work.
The proof of work world. Yeah.
That's right. Yeah. Consumes such an insane amount of energy is only going to rear its head once they inevitably try to do that. And seen that across the board already. I mean, we have crypto companies left and right reaching out to us to help us with, estimating what their footprint is, what they can do about it, all that sort of stuff. So they'll have to solve that key piece as well.
And it's actually, our friends over at ClimateTech VC have frequently raised these questions looking at companies, and they will post or posit a company to Twitter and say, is this a climate tech company? And it's both fascinating and entertaining, but it's an extremely important inquiry to make, which is, if you're importing nothing but flared gas to mine proof of work cryptocurrencies, are you a climate tech company? Well, you're solving a flared gas problem, but would there be another way to solve your proof of work problem, so to speak, is the question. Like if you end up being a huge supply sink for a lot of otherwise stranded electrons, does that make you a climate solution or not?
I think that's a long storied tradition in capitalism, is using the zeitgeist to your advantage for marketing purposes, right? And the parallels between what happened in the blockchain world and what's happening now in the climate tech world are immense from that perspective, meaning 2017 crypto explodes onto the main stage, and all of a sudden every startup out there has some sort of blockchain aspect to their business. And at the core of it, many of them were just taking a traditional database use case, throwing something on a blockchain, which definitely didn't need to be on it, but they wanted the pixie dust. And now we're seeing the same thing, right? Like, just because you manufacture a product and use more sustainable raw materials or use sustainable packaging doesn't all of a sudden make you a climate company, but many people will position themselves as that now.
Right. And what part of that would qualify you as a climate company? Is it making the materials? Is it how you use them? Is it who you sell them to? Is it your scale or volume? Is it the cost curve that you can promise in the future? Now, I've always been fascinated by blockchain because actually I think there are places, in particular, the composability and the openness of the record that you can have within them probably are going to be very useful in carbon markets. But in other applications, you could replace SQL database for the same thing. And you could have people look at it and be like, okay, like, is this somehow a better application for a relational database than what we could get from any number of large established companies and any number of interoperable processes that big businesses already use.
That's right. And that is the number one reason that enterprise blockchain applications have not taken off, is because the utility just isn't there in comparison to traditional databases, right? I mean, the utility really is when you talk about cross-party verification and those sorts of things, and that comes with its own whole host of barriers in the enterprise to adopt. I mean, it's inevitable. It's just not there yet. When it comes to applications and solutions, a recent topic that's been coming up more and more is biodiversity and nature protection. At the time, there just was not a sense that you could connect ocean preservation, forest preservation, biodiversity preservation to economic generation for shareholders. And that's flipped hard right now. Now I hear the ClimateTech and the broader climate investing community looking for solutions that will be able to protect them, because we now have this new derivative of protection and offsets and credits, which didn't exist before. That's incredibly exciting, and that I think is what crosses it truly into the mainstream. Right, is when I kind of liken it to the remember the puppy dog commercials on TV back in the day. How do you get somebody to donate to the animal shelter? You put really sad pictures of that on there. But I think we've proven in the climate discussion that showing and telling stories that are more positive rather than the FUD stories that have been pervasive in the media for 20 years and haven't really worked. I think that's what's ultimately going to cross the threshold, is now you're going to have this new generation of companies and nonprofits that can take on preservation activities, build businesses around them, and bridge that and provide consumers new products. I think that I think is a really important step, and I think we're very close to that.
I think that FUD, so it's fear, uncertainty, and doubt, is an effective way in a narrow timeline to move people's portfolio allocations.
Yes.
It is not necessarily, in the long run, a great way to make investment decisions, to make strategic allocations, or to kind of target what the next area of growth looks like. If fear and uncertainty and doubt are the prime movers of your business, then you're in the insurance business. And that's fine, but that's not the way that you build durably. I think all companies should be aware of that, but it's probably not the prime mover of building new streams of value, exactly as you highlight. There are elements within that, though, that are interesting. So, we see financial instruments made around fear and uncertainty and doubt, but actually the proceeds of them are then used for something accretive, used to create some value in the future. And I think that that's actually pretty cool.
Well, look, our time has flown by probably faster than any podcast recording I've ever done, which also does not surprise me. But I certainly have to ask, you have this amazing perch globally. You're back on the road, traveling all over the place. You get to speak with folks from the whole spectrum. I mean, from policymakers in your backyard, I'm sure, all the way to corporates, investors, insurers. In the realm of climate tech broadly, whether it's on the investing side, the science side, the technology side, what are the top 1 to 2 things that are most exciting for you personally that you're tracking? Love to get inside your brain on that a little bit.
Now, in the sort of net zero paradigm, no one is exempt from thinking about climate as a prime mover of their strategy, be it a political strategy, a corporate strategy, a financial strategy. And that opens up so much space for invention and solutions to things that have otherwise been intractable. And what I find very, very different about it now and very helpful is that because there's no escape, everybody has to start tackling very difficult problems, and people are doing it. And so I'm fortunate to work with a team of people who are way smarter than me, have PhDs in the relative fields, are looking at things that were bench experiments run by crazy people when they were graduate students, that are now at the stage of major capital commitments, with timelines, with objectives and key results and KPIs within the next 5 to 10 years. And that sort of openness, that kind of permissive framework almost to have to do everything is really, really cool. And also because it's inherently, I wouldn't necessarily say optimistic, but it is allocative. It requires people to do things. It requires making decisions as opposed to just sort of either punting on them or assuming the problems away into like some other domain. Everybody has to do something. And there's no somebody who can do everything necessarily, but there's now like a landscape in which all companies need to figure this out. And all companies have something that they can do. And I think that we're probably in the early days of determining the interplay of all the parties and counterparties within this, but that's just an exciting time. It's sort of my working thesis is that now everything's in play and everybody can play. And I feel like that's quite an interesting thing after so many years of watching these markets evolve and grow.
If you're an avid listener, you might have noticed that we weren't able to do a rapid fire round with Nat. But hey, that only gives us an excuse to invite him back. Make sure to check out Nat's weekly column for Bloomberg Green. If you want to know what's on Nat's mind, you can also follow him on Twitter at Nat Bullard. Links are in our show notes. Thanks for tuning in, and we'll be back with another fantastic episode and guest next week. Catch you all then. ClimateTech with Kentaro is produced by our incredible team at Persefoni and Hueman Group Media. Our theme music is by Guest House. And if you want to learn more about Persefoni and our climate management and accounting platform, please visit our website at persefoni.com.